The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. I'm going to start out the show with the DAX futures because someone asked a question about it, and then we're going to move into Apple because I think that's something that really deserves our attention because of the increased volatility that we've had there. But mainly with the DAX future chart, I think the thing that's important is to see that the patterns are the same in Germany as they are everywhere else in the world. As you can see from this chart, it has a beautiful three-drive to a bottom pattern. It's perfectly symmetrical, just like the Apple chart was. It's had the big rally, and right now it's getting ready to rally. It looks a little bit more to the 61% retracement in the DAX. But I've circled on the chart from back in February when it was making three bottoms, a triple bottom, at a very important level, and also we had the same type of triple bottom when we were completing the three-drive pattern. So these patterns work on just about any time frame, on anything that's liquid and actively traded. You shouldn't have any trouble, finding these patterns and ratios without any trouble at all. Now, the next one we have to talk about is Apple, and I'm going to, go through what happened yesterday. As most of you know, Apple came out and it had very, I supposedly good earnings. I don't really follow the thing. All I know is that the market gapped up about 5%. It was trading around 425, 426 for the first hour or so, and then I started to get emails from some of the folks that, that subscribe to TFNN saying, "Oh, how wonderful, how wonderful!" And I said, "Oh my God!" I said, "This is really, really dangerous." And the reason why is I'll show you the price target, of course, because I've got it marked here, in the market, because I posted it just as that was happening because my charts do not show after-hours trading like most charts, and so I wanted to be able to see what the price action was going to be in Apple today. So we'll see if it could hold, significant support. But once it gapped up, it reached the profit objective of, what we were looking for as our first profit objective, and to find that, it was really, something we had spoken about before, and that is I'm going to put it up here so that you can see what happened with the price of the stock based on, where it went. In other words, we went up to the 428 level after the market opened in the after the earnings, and that was exactly equal to the rally that we had in March. I mean, almost to the exact dollar. It was $2 off, I believe, and that was in the 428 area, which I believe 428 or 429 was the high overnight. And so I was expecting the market to come down to the 786. Well, right before the opening, the market was trading at 391. It opened at 392 and change, and then it rallied up to the 415 level. Well, if you do the math, if you go from 428 down to 392, the 61% retracement coming back is 414. And what we're doing now is we're pulling back again to the 61% retracement down around, the $400 level. The key here is that if we go below the 391 level now, this late in the day, that's going to set up what looks like another AB equals CD leg that will take Apple, down to the 374 level. And that's not a good sign. The fact that it's having this good volatility is exceptional. I think that's wonderful. But the problem is that if it doesn't go in the direction that you want it to go, it's probably going to go the other way. So we must exit the position if we get below 391. In the Apple. That's what my strategy is going to be. I know a lot of you folks don't have access to the after-hours market. And it was pretty easy to get get some of it sold up around above 420 yesterday. But when I started getting these congratulatory things, folks, this is not a business about congratulations. All I'm trying to do here is to show you that these patterns work some of the time. They don't work all the time. They work more than they fail. That's the bottom line. You have to take the responsibility on what you're doing. No one else can do that for you. But if you spend some time on these patterns, they will lead you to the promised land. You don't really have to, have access to the overnight markets most of the time. It would have been nice last night if, you were able to get out of the Apple. But, the options are certainly not trading above that point. And, that's something that you just have to deal with. They do not trade options in the aftermarket. That's one reason why the aftermarket hours is very small. If you'll notice on both CNBC and on Bloomberg, it shows the volume of the shares going through, and you'll see 100, 200 shares. Yesterday, while I was, glancing at it after the earnings came out, the largest block that I saw go across was 1,500 shares in in Apple. So it's very, very, very interesting. But the key level here is the 391 level. If we go below that, that's going to be a very ominous, price objective as far as to the downside. That would take us, down to the 375 level. So, it's very, very volatile, but, it did hit that first objective. That was exactly what we made, during the March rally, and it equaled the ABC to the down level was down to that 385 level was, spot on. The day was correct, but frankly, the big move we had, there was really nothing you could do unless you had access, to the after hours thing. But, just because someone, gets right in something, that doesn't really mean something. And if you have your choice between lucky and smart, always pick lucky. Now, we did a lot of work on Apple, so I don't think there was a lot of luck involved there. But even then, you would have had to have luck to get out of it at the 428 level unless you were looking for that and had access to the market. You really don't have any choice in that. I'm just bringing this to your attention because that's part of the trading environment that we live with. We didn't have these after-hour trades and stuff, many years ago like we have now. So it can be a blessing. It can also, be a curse. So you've got to be careful on, what you're looking at. Now, it's really important that we hold this 390 level in Apple, because if we go below that, that's telling me that, this cycle that we looked at on the 19th of April might not be working, and that could be, a significant problem, down the road. So that's the end of the Apple story. So I wanted to, just give you an idea of what was happening there. Now, the next thing I wanted to address that several people asked me about, and that is what happened with the Twitter incident on the New York Stock Exchange that happened with the Associated Press. This is part of the problem that we have, with instant access. Now, our information that we have, comes to us instantaneously. Before, up until a few years ago, it was coming, in bits and pieces. I can remember, I don't want to go back to the Kennedy assassination and stuff, but I can remember the days then we didn't have any idea what was going on. Now we have video cams that are filming the incident as it's happening, which helps us, see the exact, perpetrators or whatever you want to call them. But what's happening in our markets now, folks, is the people do not have to have access to hack the New York Stock Exchange or the NASDAQ or the commodity exchanges. God help us if they ever can do that, because that'll really throw havoc to our economy. If you want to bring an economy down, just shut down the basics of the economy, and then you've got real problems. We've got a caller from Fresno, California about Apple. John, are you there?
Yes, I am. How you doing?
I'm good. What can I do for you?
Just real quick on Apple, you had mentioned that 391, but as far as I can tell, looking at it, that 385 low seemed like to me it would be the line in the sand.
This is true. The only thing that I do is that we bought that at we bought that on Friday at the 391 level. And if we go back to a losing position after having, we did get out of a little bit of it yesterday in the overnight market, but it was only a third of what we had. And if it goes back below what we paid for it, we'd rather take a small loss and look at it again. That's basically, what I'm looking. I'm trying to keep, losses small if we can do that, and that's really what I'm looking. But you're right, 385. If it breaks that, it's really going to have some serious problems.
Well, I don't know if you've mentioned this before, but that where it hit was it filled the gap. It hit the 200-day moving average on the weekly, and it's also a 50% retracement from the January 2008 low.
Yes, there's so many numbers there that it's just it's just and as a matter of fact, John, when they I don't know anything about earnings, so I know what they're expecting or whatever, and then it opened higher, and it opened too high. I said, oh, I don't like this. And then when people start saying, gee, how great, I said, oh dear. And then I started to see it fall. I watched it go from 428 to 422 really quick, and then it stayed there for a little bit in the overnight trading, and then I started to see it go down. And once we broke, I think 408, I said, oh dear. I said, this is not even going to be an up opening, and that's certainly what's happened. But 385 is the line in the sand. I know it's a very high-priced stock, and the difference between 385 and 391 is not too much. But for me, 391 is the number that I will, say goodbye and, look another day.
Look at it later after that, maybe.
Yeah.
All right. So this DAX you're saying.
Can I tell you a great story about Fresno?
Yeah.
You have a minor league baseball club there. I don't know the name of it, but several years ago they posted a YouTube picture of a ball girl making a spectacular catch. She climbed up the wall and about 20 feet up the wall and made this spectacular catch like nothing I'd ever seen before, and it was all over the Internet. This is about 7 or 8 years ago, and I was so impressed that I wanted to give her a little present, send her a piece of jewelry or something. I'd never seen a catch like that from anybody, and it was fantastic. So I called the office of the minor league baseball club, and the lady started laughing, and she said, that's not true. She said somebody developed that, and they used it as a stunt, but none of it's true, and it hit the Internet, and of course, it brought a lot of hits to their site and everything like that, but it's just another reason you got to be really careful what you see on the Internet because it might not be true.
Yeah, right. That's the Grizzlies.
Yeah, the Grizzlies. That's right. I did. I called the office, and it was really an amazing picture. I don't know if it's still on the Internet or not, but it's one of the most spectacular catches I've ever seen. But the problem is that it was not true. It was all, and then she showed me a couple things in the video that proved that it wasn't true. In other words, while the girl was making the catch, the people in the stands were looking the other way. So they weren't following the ball. They were following something else in the game, so it was all, all rigged. So I guess if you look at something closely enough, you'll find the error, I guess.
Right. Well,
okay, listen, thanks for calling in, and I certainly appreciate it, and we'll keep our fingers crossed on Apple. That's all we can do at this time.
All right. Later.
Okay, thanks a lot, John. Okay, the next thing I wanted to focus on was in fact, we were talking about that when we were talking to John, and that is the incident we happened at Twitter yesterday. They said that we got to take a little break here, and we'll come back to that. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I was trying to talk a little bit about the Twitter incident that happened yesterday that caused the stock market to move quite a bit. I posted the note market, which is a huge market. Those are the short-term interest rates for the treasuries. Anything under 5 years and under. The bond did exactly the same thing as far as the movement. The bond move was a little bit more. The bonds moved $3,000 up and down in a matter of 5 minutes, and you can see what happened to the note market. The note market is beginning to look more and more bearish all the time, and I'm beginning to think that we're not going to get this run up. In the Treasury bonds that we're hoping for up in the 150 to 152, 154 level. Whether we get there or not, we'll have to remain to be seen. What I wanted to address today is the fact that the circumstances that we're dealing with with this electronic trading and this instant access and stuff that we have now, there's a dual sword to this. I know it's great, and we got lower commissions and everything, but people that do not have to hack into the New York Stock Exchange or the Federal Reserve or any place like that. They can do like what happened with this AP thing. They can go outside and post these rumors, and believe me, there'll be more and more of these things happening, because when you can move millions and millions of dollars in a matter of a few seconds, that's telling you that something is really there's a problem, and really I don't see a solution, because there's going to be more and more of this, because people realize you don't have to rob the bank. You can just use electronic, means and rob the bank without using a gun or any danger at all. So this is something that we have to deal with. My suggestion is that you've got to use your stops. Don't change anything from what you're doing. I'm not changing anything. The things that I was involved with yesterday, really didn't have much to do with, the markets and stuff like that. Gold did not, move very much at all. The currencies moved very little. Crude oil moved very little. It was only the bonds and the stocks that moved, really quite a bit. So these are things that you have to consider, when you're doing it. It's part of our risk assessment because, these flash crashes that we had, the last one we had was February, it was in May, I believe, a couple of years ago, where we had the flash crash, and we had pretty much the same thing that occurred. It was down 150 in the Dow. In a matter of a few minutes later, it was up 150. Now, that tells you that there's something inherently dangerous in your trading when you're doing this. So the only way you can protect yourself is by using the stop-loss orders. The stop-loss orders are there for your protection because one of these times you're going to see one of these flash crashes, and it's not going to be a flash crash. It's going to be the real thing, and the market's going to drop 300 or 400 or 500 points maybe before, it drops. And, you could be liquidated on a margin call and you not even realize it. So you've got to be, extremely careful at all times, and especially now, because I believe that the biggest problem that we have is this electronic thing that we've got called the computer. And, these people are very smart. They can hack into these things, and they can throw havoc into the markets. And terrorists, cyber terrorism is a very, very dangerous thing. It's far worse, than the loss of life because, you lose your life, it's pretty much over. But, when you lose everything, you've affected your family and, everybody involved and your lifestyle and everything like that. And that's the most devastating part of, of your life is when you lose, everything. And believe me, I've done that a couple times, so I know how that feels. But as you get to be older, like I am, you know that you don't have that many dances left on your dance card. So you've got to be able to, be able to protect yourself, and that's what you're trying to do. The action in the market usually follows the trend, so you've got to be just extremely careful. Just continue to use stops like you're supposed to. Usually there's orders on the way down. At least when I was watching it yesterday, there didn't seem to be any really bad a problem with gap fills, or anything of that nature. That did not seem to be happening anywhere. So these things are going to happen in the future. They're probably going to get a lot worse, and there's probably going to be one or two of them that are going to be in the news for a long period of time. We haven't had a 911 incident in our, electronic part as of yet, but I wouldn't be surprised that, it's coming down the road because, that's what usually happens. We've had the second flash crash yesterday, and like I said, one of these times it's not going to be just a flash crash. The news will be correct, and the market will have one of these 400 or 500 point down moves. And from this level, 1,000 points in the Dow would not be unheard of, especially with electronic trading and buyers leaving the market. It's very interesting. I did hear on Bloomberg last night that one of the people that Jim Simmons, who does Renaissance. I'll cover that. We've got the long break coming here. 877-927-6648. Oh, you're back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I was mentioning about Jim Simmons from Renaissance. I think he's probably one of the finest minds on Wall Street. They hire the best quants from MIT and Princeton and other places, Yale, to do their work on automated trading and stuff like that, and they're worth billions of dollars. And it's really amazing because what he said is they suspended all trading during that time yesterday, and another gentleman came on that does a lot of automated trading, and they said they did very well on the way down, but on the way back they gave back 75% of everything that they made, which is not surprising because the whole thing happened in 10 minutes. Now, I want to focus on the markets because we've got several markets that are at real critical levels. First, we're going to take a look at the E-mini S&P because we're completing a bearish Gartley pattern up here at this 1579 level. So far, we've been to 1578. Whether we make the 1579 or not still remains to be seen. But if we go below 1568, the low we made, yesterday, then I think we'll have to, reevaluate, what we're looking at. So this is it's going to be quite interesting to see if this is going to be the case or not. I'm just realizing here right now, looking at this chart, they took out the flash crash. No, they put it back in. I have to put it back in because it stopped the. Excuse me, I didn't mean to. I just realized the flash crash yesterday was not in there. It doesn't affect the chart very much because it still completes another ABCD up at that same level. So it looks like we're very, very close here in the stock market to get it turned down. Tomorrow we have the full moon, and the work that we're doing for the new book basically says you want to be buying on a new moon and selling on a full moon, and especially if the market happens to be bearish, selling on the full moon is by far a better strategy. So we'll wait and see how this operates and whether we're going to be. But if we clear above 1585, all bets are off. But if we go below 1568, then I think this market will have a sell-off to the downside. Now I wanted to talk a little bit about what Basil had on his show because I watched the VIX index just because the fact that it trades so beautifully technically, and we're getting that 135 pattern, coming into play right now. In fact, the low today at 1332 was the exact 786 off the last high. So that's telling me we're very close to a real critical turn in the stock market. Looking at the lunar things and the fact that the S&P is doing what it's doing, the NASDAQ's doing what it's doing, then that's telling us that we should be pretty close, to something pretty dramatic, in the opposite direction, and that would be, to the downside. It has nothing to do with what happened with the Twitter thing. That Twitter thing is a outlier event. You don't see that happening very often, but it does happen, and there's nothing else you can do about it. Now, one of the key markets that I follow all the time and that we talk about here quite a bit, and that is the gold market. It's a really interesting market because we are just getting ready to take out a very critical level, in my opinion, in the gold market. If we get gold much below the 419 level, that's going to tell us that this rally that we had from 1322 up to 1439, 1440, this rally would be pretty much in jeopardy, and that would set up, the AB equals CD move that we'd like to see to come in around the 1365 to 1370 level in the gold market, because I think that would be a very good buying opportunity if we're able to get that in gold down the road. So that's it's an important spot that we're looking at right now around this 1419. That was the low we made yesterday, and if we break below that, that would give me a pretty good idea. The reason why I say that, folks, is that the rally that we had from the April 22nd high at 1440, we came down roughly $40 an ounce with that beautiful ABCD pattern that stopped right at 1404 an ounce, and then we rallied up to the 786 retracement of that at the 1432 level. That sets up, if we go below 1419, that would tell us, at least would tell me, that we have a really strong probability of moving down to catch that 1365, 1370 number, which is something that I think looks, really doable in the gold market because it's very bearish on the longer-term charts. It's very hard to find a bull. That doesn't mean it's a bad thing, but because if you can't find any bulls, that means all the bears are already in there, so you could get even a bigger rally. But gold has a real chance to be bullish. And the reason why I say that is that there wasn't a collapse in open interest when this thing dropped. People were willing to come in there and take positions, so the open interest did not change very much. And that's different than what happened when silver was making its high in April in 2011. When that was happening, people were leaving the market, and that's a bad sign. When people are coming into the market, then you get a chance. Someone asked a question about the silver. I watch the silver. It trades pretty good technically, but the volatility in silver, you have to risk so much compared to what you have to risk in gold. Gold, you could trade it trading at $1,400 an ounce. You don't have to risk more than $800. And believe me, silver at $23 an ounce, you have to risk over $1,000. And so I know the volatility in silver is pretty great, but the risk that you have to do in trading silver is not worth it, in my opinion. So it's much better to trade the gold market. I love silver as a metal. I love it as a coin. But the trouble is I don't love it as a trading vehicle. It just has too many periods where there's not a lot going on, and you can get really, really smacked pretty hard. Someone asked me to take a look at the Canadian dollar, and I watch that all the time because we are at a really critical level in the Canadian. I'm going to put up the daily chart because we've had a major, bearish Gartley form, and then we had a really good breakdown to the 61% retracement. And now what's happened is the market is at this 102.80 level, is right up at the 786 retracement coming off of the February's highs. Now, the only question that I have here is the fact that the Canadian dollar has only taken 7 days to make this 786 retracement. It got here very, very quickly. So I would rather sell this on some weakness as opposed to selling it on some strength because of this, wide move we've had. It's moved over $2,700 in just a matter of a few days, and that's a pretty big move in the Forex market. So I have to respect that, and I would like to wait to see how it handles this 102.80 level that we're trading at right now. So that's what I think is happening in the Canadian dollar. So we'll keep an eye on that one. Now, the next one that I wanted to talk about that we all use, and that is the crude oil market, because we are going to post a 30-minute chart on crude oil going back to early part of April, and you'll be able to see where we are right now, because we're very, very close to a major retracement, Gartley sell pattern at the 91.30 level, and so that pattern is very, very distinct. It's making a very good rally, just like we did the last time. We hit the 88 level. We rallied well over $5 a barrel, and that's exactly what we're doing now. So it's going to be very interesting at 91.31. What happens with the crude oil, because it's going to be a very, very, very tough resistance, in my opinion. Because on the longer-term charts, crude oil, has made the mid-80s, which we thought it would do, and we're having to bounce from there. But it, frankly, on the longer-term charts, looks rather bearish. So I have to stick with that as far as saying that we're getting ready to go higher in crude. I think we're very close to a major sell point in the crude oil at this 91.30 level. We'll cover that more when we do the commodity show tomorrow. So that will be something that we really need to be watching. Now I need to talk about the NASDAQ here a little bit, and I want to just show you the overall, where we are in the market with the NASDAQ going back 13 years, and taking into account the high we made in 1999 and in March of 2000 But basically all we've done is we've made a 50% retracement of that move. We've had a 3-drive pattern forming here, also a head and shoulders pattern in this weekly chart for a long time. It has not broken it by any stretch of the imagination, even though we've made new highs in the S&P, and we've made new highs in the Dow Jones. We have not made new highs in the NASDAQ, nor have we made new highs in the New York Stock Exchange Index. New York Stock Exchange Index has only been able to make 78% of the high from 2007, whereas the NASDAQ has been able to, go above that. But the problem is the fact that many of the NASDAQ stocks that were in the index when they were trading at $100, $200, or $300 a share no longer exist. So that changes the index somewhat. That's why I always try to, remind people it's an index of stocks. It's a market. It's a stock market. There's an index for stocks, but it's a market for stocks. So each stock should be traded differently. The chart of Apple looks different, than the chart of, the NASDAQ or the Dow Jones. That's because they're different things. Different people are in them for different reasons. One of the most amazing comments I heard yesterday on Bloomberg when the earnings came out is this is a New York Stock Exchange member said that there was nearly a 95% correlation with Apple in the stock market. And I was dumbfounded. I said, why doesn't someone challenge him? And on the very next segment, the gentleman came on that was on the program, and he said, I would challenge that question, the statement that he made. He said, there's no correlation between the NASDAQ and the stock market and Apple. Not since last August. It gave up at 703, and it's not been following the market. I mean, we've been making higher highs for weeks in the stock market, and Apple's been making lower lows. So it's a market for stocks, and each stock should be, traded a little bit differently. So that's the main thing. The only thing you can control in this business is the amount of money that you have to risk, and the only way you can do that is by planning what you're intending to risk on a trade, not how much you're going to make, because you never know how much you're going to make on a trade. I mean, yesterday when Apple gapped up to $28 a share, I was saying, wow, this could really be a monster trade. All we need to do is to get it above, $440 a share, and it'd be off to the races. And sure enough, the market turned around and, dropped a quick 5%. Goes up 5%, goes down 5%. That's good volatility. I like to see that. But if you try to base your profits on something that, is out in the future, that is the wrong thing to do, because the only thing you can do is control your risk. That's the real key, to what success is all about in all of these markets, in my opinion. So it's important to remember that. The gold market is still holding this 1420, 1421 level so far, which is a good thing to look at. Someone asked a question about the euro. I still think that, we are heading down in the euro. I will give a quick review of that here with the daily chart, and we'll be able to see it, quite easily, because we've completed the ABCD patterns that we were looking at, and all we're going to be doing now is we've made a retracement back that stopped exactly at the 382 level, and now what we're doing is we're making a retracement down to the 61% level that comes in around the 129 level. That's about 100 pips from where we are at the present time. But it's one of the best, not one of the best. This is the best trading market for trading for a living that you will ever find. It has all the things happening that are necessary. You've got liquidity, you've got volume, you've got fairness. It's just really good. And yesterday, when the flash crash came, the euro was not involved at all. The people in Forex weren't even paying attention to it. So it was a better thing to be in, either long or short. Wouldn't make any difference. But it was the better thing to be trading. The price objective that we could possibly have on the euro, based on this chart that I posted into Tiger TV, that price objective comes all the way down to the 122 level, and that would be the 786 of the whole move from July, so we could easily make the 122 level. But first we have to get through 129, and then we will, we'll see what happens from that point. We've been down, 4 or 5 days now since the high was made at the 382, which means we're, oversold, a small amount, but, currencies have a tendency to trend for a considerable length of time. So just keep in mind that we need to hold 129 in the euro, and if we do that, then we'll see what happens on the next step. It's the same thing that we're looking at in the gold. The 419 level should be very critical support in the gold, and going below that would be a very, very scary thing on the longer term. We're going to take a little break and then finish up the show. 877-927-6648. Wow.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we want to talk about the bond market here because I really think this is where we've got the big problem. I think that when interest rates finally start to go higher, we are going to be looking at something that is, very, very ominous, no matter any way that you put it. And what I want to do is to prove to you. Let's not say prove. Let's say suggest. Okay, let's say suggest. That would be much better. I'm going to post a chart for high-grade, high-yield bonds. These are the things that are known as junk bonds. And we are very close to making new highs. In fact, we've done that today. We have gone into new high ground in junk bonds. What this means is people are buying junk bonds, and they're not buying the 30-year Treasury bonds. They're searching for yield. The difference in the spread between the junk bonds and the 30-year bonds is 2%. Back when I was at Drexel, 5 eons ago, that spread was around 14%. But now it's 2%. And that's because we've been in a bear market in interest rates, going down for 33 years. I believe that's getting ready to turn. The Federal Reserve says they're not going to let that happen, but believe me, they do not have control of all the market. They can control the short-term interest rates. They can try to control the long-term interest rates, but it's basically the market that will finally do it. They're not big enough to manipulate it forever. And I know they're putting a lot of money in, $1 trillion here, $1 trillion there. Pretty soon you're talking about serious money, but there's some other factors here that I think will come into play like the overall state of the economy and what happens with Japan and China, whatever. But this fact that these high-yield bonds are going much higher is, really is a big thing in my opinion. If you remember, I think it was about this time last year, Meredith Whitney came out and gave a big sell on the junk bonds, and that was right at the bottom of the market. It was right near the end of May of 2012. And I'm not saying anything bad about that. It's okay to make that call or everything, but that's all it is. It's a call. You're the one that has to take the responsibility for this. All we're trying to do, and everybody at TFNN is trying to give you some ideas, to put trades on for yourself. If they work, fine. If they don't, then you basically have to move on. But you're the one that has to, take the the responsibility for it. So, keep in mind when people are buying junk like they are now. In fact, the junk bonds are moving to higher ground when the Treasury bonds and Treasury notes are not. That in fact is a very bad sign. There's one other thing that I think is important, and that is the fact that on this last run up that we had, the note market, which is the shorter term paper. I'll put the daily chart up here, and you can take a look at this because this is really tells you a great deal. On the last move up, it looks like we don't have time. Live every day in an attitude of gratitude, folks, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. Yeah. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.